Hi everyone, and welcome back to Voces que Educan. I'm so excited about today's episode because we are talking about something that close to many of our hearts: buying your first home, especially if you are self-employed. And let's be honest, that's a lot of us, childcare educators. Today, we are joined by Jeff Zappone from AnnieMac Home Mortgage, who's going to break down what program and support are out there for first-time home buyers who are also self-employed. Jeff, welcome and thank you for being here.
Thank you, Iris. Thank you for having me.
Yeah, thank you to accept my invitation. Okay, Jeff, before we dive in, Jeff, can you tell us a little bit about yourself and what you do at AnnieMac?
Sure. So, a little bit about myself. First off, I'm born and raised in Waterbury, Connecticut, and so I'm very connected to the community. We offer here at AnnieMac Mortgage a lot of first-time homebuyer programs. Probably 70% of my business is with first-time homebuyers. So, um, it's you have to really do a lot of hand-holding, be patient, and really get to know your consumer and just really explain the details to them and what it takes. It could be a very overwhelming process
Mm-hmm.
purchasing a home, especially if you're a first timer. A lot of years of experience doing it. Was in the business in the early 2000s, all the way up until the crash. Got out, and then I was just back in. Got my license re-up back in 2018, 19. So, but yeah, we at AnnieMac Mortgage, we do specialize in a lot of the first-time home buying programs. And myself, I do a lot of business with the self-employed, with the entrepreneurs of our community.
Mm-hmm.
So I have an extensive experience working with self-employed and business owners.
Thank you, Jeff. We can talk a little bit about qualified programs and benefits. Are there a specific loan program or grants available for childcare educators looking to buy their first home?
Yeah, so that's a good question. Well, what I'll do is I'll start off with saying the Connecticut Housing Finance Authority does have some programs available for first timers. As of right now, there's what's called the time to own. And the time to own, depending on your income limit, um, you know, we have a $25,000. It's a forgivable loan. It's fully forgiven after 10 years, and the state of Connecticut is offering that for the first-time home buyers, and it goes towards the down payment and the closing costs, which typically will cover the down payment. 25,000 typically will cover the down
Mm-hmm.
payment and the closing costs. The interest rate is also subsidized, so it's a lower interest rate than the prevailing market. And as far as teachers, though, so they do offer special assistance for the teachers,
Mm-hmm.
especially in targeted locations. And the interest rate is maybe up to 0.25% less than the interest rate that the CHFA offers.
Mm-hmm.
So you could get a really low interest rate. Not only are you getting a low interest rate as a first-time home buyer, but then as a teacher and as an educator, you're also going to qualify for a special incentive and with a discounted interest rate as well.
Yeah, thank you, Jeff, for that information. Do any program offer down payment assistance or lower interest rate for educators?
Yeah, so as I had just mentioned and stated, there are the teacher
Mm-hmm.
programs that are available on CHFA. Um, and if you go onto the website, it's chfa.org. And on that website, you'll find, if you just scroll down and you'll look for the different programs, you'll see the teacher educator program. And there's a lot of different towns also that um, they're trying to, they try to attract a lot of educators to certain
Mm-hmm.
areas and certain towns in the state as well. So a lot of that will be located on their website.
That qualify for family child care too?
Yes.
Okay,
Yep.
perfect. We can talk about loan qualification and process. What are the credit score or income requirement for this program?
Okay, so the credit score and income qualifications. Well, basically, there's two type of mortgage programs that we follow. I'll keep it simple. We have the government financing. The government financing is going to be catered towards the customer that has credit scores probably less than 700, but above 600. Just to kind of keep it simple. So anywhere between 600 to 700 is going to fall into the FHA financing. And then there's the conventional financing that's going to be over 700. The conventional is going to be the better option for various reasons. And it's just an easier mortgage to get through the process with. And with the market that we have now, most sellers are trying to accept a conventional mortgage. We do look at income. The conventional mortgage is a little easier to qualify for because the debt to income ratio is a little bit more forgiving, a little higher. It goes up. We can go up to 49%, whereas the FHA is 45%. Now, these are the CHFA guidelines that they set forth. But I would say like that's the main gist of it, just to kind of keep it, simple for the audience.
Okay. What documentation is needed to prove income for a self-employed applicant?
Okay, so what I would say to this is the self-employed applicant and then the W-2 wage earner applicant. We're going to look at the income the same way and qualify in the same way based on the guidelines that we use to qualify. However, it could get a little complicated when you're self-employed. My advice to the audience and anybody that's applying for a mortgage, maybe do your research and talk to maybe some of your friends and try to get a referral on a loan officer that may specialize in the self-employed borrower, because it could get a little complicated reading the tax returns. There's different types depending on the businesses that you own. It could be a Schedule C that you're filing with the tax return. You could be, that the Schedule C self-proprietor, sole owner of the business. You could file partnership returns. Maybe you have a partnership income. And so it could get kind of complicated. I do a lot of business in the community with business owners, with the self-employed. So I'm very well versed in qualifying the income and analyzing the tax returns and knowing what to get and knowing what to ask for. There's also different loopholes that we follow, different guidelines. There's in some cases we may be able to maybe just get 1 year tax return to qualify the income, as long as you've been in business for 5 years. So it could get a little complicated, and if you don't have a loan officer that's very experienced with the with analyzing tax returns for the self-employed, you could find that it could be a difficult process if you're not with an experienced loan officer.
So Jeff helped me to buy my house, and when I did the process, he helped me a lot. If you are self-employed, this is the man.
Thank you.
So Jeff, for down payments and closing costs, are there programs that allow for little to no down payments?
Yep. Yeah. So as I mentioned earlier, it's called the Time to Own. So the Connecticut Housing Finance Authority has this program called a Time to Own, and it's up to $25,000. However, if your income goes over a little bit, and we look at different income categories or qualifications, income restrictions, income limits, I guess you could say, depending on the county. So you have New Haven County, Litchfield County, Fairfield County, Hartford County. There's a few others. And then depending on the county, we'll look at the income. Just to give you an idea, in New Haven County, without looking at the exact income, if you earn under approximately $92,000, combined income, total income, you may be eligible for the 25,000. If you earn over 92,000 but under 110,000, you may be eligible for a portion of the 25,000. It's 75% of it, so it's $18,750, and that money goes towards the down payment and the closing costs. So it'll in most cases it could cover the 25,000 will cover most of the it'll cover all the down payment and the closing costs. But the 18,750 will cover, almost all of it. So it's been around for the last I would say definitely 2 years, maybe longer. There's about 9 million in there now that the state has got funding for, and then when it dries up, the state of Connecticut will go through the process to get it approved again, and it's been getting reapproved each time it runs out. The money runs out. So, but I will say, Iris, aside from that, because the money won't be there forever, the Connecticut Housing Finance Authority, they do always offer a down payment assistance program for first-time homebuyers. And it's 4% of the sales price. So if the sales price is $400,000, they'll give you 4% of the $400,000, which is $16,000, and it's up to $16,000, I believe. So anything less than that, but that money that's a loan that they'll give you. It's at 5% over 30 years. It comes out to about $7 or $80 a month, typically, just to give you an idea. And that's always available regardless. So there's always options for the first-time home buyers that the state of Connecticut offers. And the interest rate is always discounted.
Okay, Jeff, we can talk about long-term and repayments. So what are the typical interest rate for this program?
So the interest rates for this program, it's a discounted interest rate from the prevailing market. So if the market's at 7%, you'll find that the CHFA rate could be possibly 6.5%. So it's definitely lower than the prevailing market typically. It's also depending on the program too. If it's FHA or conventional, the FHA will be a little lower than the conventional. But it is and this is specifically for first-time home buyers, and there's requirements to be a first-time home buyer. You can't own a home in the last 3 years, and then for the time to own that I was explaining earlier, you have to be a state of Connecticut resident also for the last 3 years. So there are different stipulations and requirements, but they try to make it more affordable for a first-timer, and the monthly payment low, and so that's why the rates were a little lower.
Okay, Jeff. What should they do first to prepare for home loan application?
Okay, that's a good question, Iris. So the items that you typically need for the application for a mortgage, so we always need, for the CHFA, first-time homebuyer mortgage, it's 3 years tax returns. In some cases 2, but for the time to own, we're going to get the last 3 years tax returns. And then we're going to get your pay stubs. If you get paid once a week, we like to get a 30-day pay period. So 4 pay stubs if it's once a week. If it's weekly, then it's 2 pay stubs to total that 30-day. For bank statements, we're going to get the last 2 months. We do require original PDF bank statements, cannot be screenshotted, or the bank statements have to be original. And then copy of a photo ID. The W-2 forms that you get from your employer. If you're not self-employed and you receive a W-2, we like to get the last 2 years. So in this case, it would be 2023 and 2024.
In this case, I'm a child care provider and I have just one payment a month. So how you work with that?
One payment meaning?
Yeah, I have just one what you call? A pay stub.
Oh, okay. So now, I'm sorry. So we want to talk a little bit about the self-employed.
Yeah.
So with the self-employed, we don't look at the paychecks that you may get from your vendors or your services rendered. We don't look at any of that. What we may do though is a profit and loss statement,
Mm-hmm.
either by the accountant or you could prepare your profit and loss statement on your own for the current year that we're in. But we're going to really look at your last 2 years tax returns. So we're going to look at the tax returns for the business for the last 2 years, and then we're going to take an average of the income. So it is a little harder to qualify as a business owner. Why? Because we're taking an average the last 2 years. So, you know, if you're on salary and you make $70,000 a year, well, that's your income that we're going to qualify you for. But if you made $70,000 as a business owner in 2024 last year, but you made $50,000 the year before, we're going to take an average. So we're not going to be able to use the 70. So we're going to take the 70, the 50, and divide it out and average it out, and it'll come to somewhere in the 60s. So it is a little harder to qualify as a business owner. But the longer you've been a business owner for, if you've been a business owner for 5 years, it'll be a little easier because then I'll just need to look at 1 year tax return. Typically, when you're a business owner, your income goes up, right? That's why we're in business. And so looking at the recent year will help the most because each year is going up, and we won't have to do that average. So, good thing to know is if you have been in business for 5 years, there's a chance we may only look at that last year tax return, and you'll qualify for more as a result.
If they need help to have the profit and loss, do you have people to help them to do that?
Yep. So if they do not use an accountant and kind of do their tax returns on their own, the profit and loss statements are, I can help them with that. We do have some profit and loss statements that we kind of could show them, and happy to kind of share that with the with the business owner. But yeah.
Okay. Jeff, can you recommend financial workshop, especially for first-time home buyers?
Yeah, this is a good one. And if you go on to the CHFA website, there's not a lot, but I think there's 3 or 4 workshops that you can register for. One of them being just the first time, what it takes to be a first-time home buyer. There's also another one. As a first-time home buyer, you are eligible to also purchase a multifamily with a small down payment. Actually, in some cases, with the time to own, and if you're eligible for the $25,000 down payment assistance, you could purchase a multifamily, a 2 to 4 unit, without having to put much down at all. You do need, I believe it's 2% of your own money into the transaction if it's a 3 or 4 unit. However, but the multifamily, there's landlord classes, a course that you could take, what it takes to be a landlord. And then there is another course that they help educate on finances and managing a household and so forth. So there's a few on the website, the chfa.org website.
Okay, thank you for that information. Anything else that you can add or recommend to childcare educators that they are self-employed?
I think I encourage any child care providers out there, whether it's a teacher, what have you. There are special programs available for you, and within the state of Connecticut, the Connecticut Housing Finance Authority has them all listed out on their website, the different towns that they participate in. So depending on the towns and the areas that you live in, you may be eligible for some special incentives. And so I would highly recommend checking out those websites, and I'm sure that my contact information will be provided. I'm happy to answer anything for you or point you in the right direction to give you that information.
Thank you, Jeff. And thank you for being here and educate the family childcare educators. So if they need to contact you, can you bring the information to them?
Sure. I can be reached by cell phone anytime. If you want to take my number down, 203-592-3602. What I will say is I do know Iris has a big influence in the Spanish community. I have bilingual loan officers on my team and my staff. Grew up with a lot of Spanish friends growing up, so I do a lot of work with the Spanish community. And I do have bilingual loan officers that we can help. So I'm happy to help and assist in any way I can in the community.
Thank you, Jeff. If you need more information, you can contact Jeff, and production can put the information in the screen. So thank you for being here,
you.
Jeff.
Yeah,
thank you
for having me.
Yeah, and I forgot something. It's hard to be self-employed, but not impossible, because I'm self-employed and I have this beautiful house thanks to Jeff.
No, you're
Thank you,
welcome.
Jeff.
It was a pleasure assisting
Yeah,
you.
thank you. Este fue otro episodio de Voces que Educan. Como ya saben, el inglés no es mi idioma principal, pero necesitaba que tuvieran esta información tan valiosa para nosotras que somos empleadas por cuenta propia. Y a veces, por falta de información, nos cohibimos de empezar el proceso para comprar una casa, nuestra propia casa. Así que muchas gracias a Jeff de nuevo por acompañarnos hoy y por compartir toda esta increíble información. Y para nuestros oyentes, recuerden, ser dueño de su casa es posible, incluso si trabaja por cuenta propia. Solo necesitas la información correcta y las personas adecuadas de tu lado. Dejaremos la información de contacto de Jeff en las notas del programa y hasta la próxima vez. Sigue soñando en grande y construyendo bases sólidas. Entonces, quédate conectadito porque el próximo episodio será una gran sorpresa. Así que quédate por ahí, síguenos en todas nuestras redes sociales, las van a poner en pantalla, van a poner los números de teléfono de Jeff y recuerda, como Jeff dijo, él habla inglés, pero en su oficina él tiene personas adecuadas con nuestro idioma para que entonces puedas empezar todo el proceso y buscar más información. Así que hasta la próxima. Llévatelo, Nuni.